G'day guys, welcome back to Pete's Investing. It's 13th of March 2024. This is the German DAX update. We've still got relentless bullish trends, and relentless I use from one of my viewers. Yeah, he did say that. But we've still got bearish divergence in some areas across different time frames. So let's see what's happening in terms of next levels. So what we've got across the board for those new to the channel, we've got the weekly, the daily and the hourly. And if you're trading on the small time frames like the hourly, we look at the larger time frames. Likewise, if you're trading on the daily, we look at the weekly and the monthly. In this case, the weekly, the monthly and the daily on the ADX are all showing bullish trends at the bottom here, the ADX 25. We've got the CCI 150 above these moving average bands, and that, if you want to know how to code that, it's the description for the videos in the description below. So they're currently bullish and above the moving average bands on the weekly. It's just a fresh breakout on the daily above those bands as well. But just be careful, you can see here that CCI 150 is just entering the bands, so we may want to hold off about going long until we see this more substantially break to the upside. Now as well, I did have this resistance up here at 17,909. And this is the daily chart. Let's look at this first. This resistance up there, now that's been breached, so I'm going to delete that. And no sign of other resistance at the moment. But on the daily, we do have a bearish divergence, and that's still in play. It's been that way for a number of months now, versus higher highs on the price. So long as this CCI 150 remains lower than that point there, we're going to consider this a divergence. So I'm just going to move that trend line up to there. And in terms of a retrace, we take it, once it starts retracing, we take down to the 23 to the 38% level retrace, and that would be drawn from that low to that high. So our target would be in that 38% initial target. It could of course drop lower. Now I'm not going to draw a target on this one because that's still rising. I'd like to see a break below. Let me just get rid of that, retrace it for a minute. I'd like to see a break somewhere below this. Let me draw somewhere around there. If I was going to draw a trend line, probably it'd break below that point there, in which case we'd see it start to fall. But at the moment, no sign of that. So avoid going short at the moment, especially when the CCI 150 is breaking to the upside. The weekly, likewise, we've got a couple of divergences. We had a bearish divergence back here up until that high on the CCI, and it fell off and hit our target area, identified by that rectangle, and that was identified between that range there. We've got another divergence still in play, and that's at the wider time frame there. So that's, again, what I just mentioned on the daily chart. And on the hourly, again, we've got just touching the moving average bands there. We're making new highs. Now, I don't like projecting Fibonacci extensions because often they're very subjective. I prefer the Fibonacci retracements. So at the moment, I'm not going to talk much about the hourly chart. I'll just get stuck into the trading idea for you. So what I've got here is two trading strategies, one with the average down approach and one with the stop loss. So these two charts here are the 1 hour charts, and this is the daily. So remember, trading in the direction when the weekly and the daily are in alignment, and currently the daily's breaking to a fresh breakout on the upside of this moving average band. We don't take trades when the daily is within that band. So we only take short trades when it's below, and the weekly is also below. And we only take long trades when both the weekly and the daily are above the band. So in this case, the first rule, we use the price chart. We identify with a Heikin-Ashi pattern. So we go long when the Heikin-Ashi is green and go short when the Heikin-Ashi is red. That's the first rule. The second and most important rule is, as I said, when the CCI 150 is above this moving average band. So what I've done here, I've got a back test on both the stop loss approach and the average down approach. And you can see there on the daily chart, when the CCI broke above the moving average band, you would have taken those long trades. Now notice, ideally you would have stopped taking long trades when it entered that band in there. You would have stopped taking long trades and started taking long trades again from that point. But what I've done here in the back test, I've gone back and taken the whole set of trades from that point onwards. So I'm just telling you, don't trade the whole period. You would have stopped taking long trades at that point and started again at taking long trades there. You would not have taken short trades during that period because the weekly was not showing short positioning. So what this basically does is the average down approach basically adds to your positions. You can see there it's added 3 times there. 3 there, and 4 there. This is the stop loss approach. So it only enters and exits with a stop loss approach. So this strategy would have generated $6,801 returns from the 24th of January, and the stop loss approach would have generated $1,179 with a few losses along the way. So stay tuned to the very end of the video. This is the first slide. I've got 2 slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.